Okay, vertical analysis. So vertical means up and down. So vertical analysis is an analysis of the current year. All right, you're looking down through 1 year. All right, so on the income statement, we're going to write this. On the income statement, everything is expressed. Oops, I don't know how I got over there. Everything is expressed as a percentage of sales. All right, which means that sales, all right, or net sales, depending on what they give you, is always the 100% number. Okay, everything else is divided by sales or net sales to find their percentage. Okay, so I just copied the numbers over for 2018. All right, so net sales will always be your 100% number. All right, so these are all going to be percentages, so just let me make that a percent now. I'm going to give it 1 decimal. All right, and then to find the percentage, you're always just going to divide by net sales. All right, so this one's going to be 513 divided by 858. I just took off the zeros. All right, so equal 513 divided by 858. Okay, and then this one's going to be 345 divided by 858. All right, now one thing I want you to notice is that these two will add up to the 100. Actually, your whole income statement will subtract down to, it'll all, add up just like the numbers do over here. Because you're doing everything as a percentage of 100. But cost of goods sold and gross profit always add up to the 100% of net sales. Okay? All right, so our selling here is going to be 126 divided by 858. Our admin is going to be 118 divided by 858. Our total here is going to be 244 divided by 858. And so on and so forth. All right, everything's going to be divided by the 100% figure, which is net sales. Now, you could put a formula in here if you want to, and then just copy it down. All right, now, though, remember, if you put in a formula, if I do it like this, it's not going to copy correctly. Because what's going to happen when I copy this down, it should be saying N10, and if you look, it says N11. Okay, so if you want to copy it down, you have to put a $ in front of the 10, so it always goes back up to row 10. So now if I copy it, notice that it says N10. Okay. Oops, I don't want to do that. See, and I can copy it just the whole way down. Of course, it's going to mess up my little lines here, so let me fix those real quick, because that's going to bother me. And double bottom on this one. Okay, so basically what this is showing you is how much of every dollar you sold went to these various items. So for every dollar of sales I had, of net sales I had, almost 60 cents out of that dollar went to pay for the item that I sold. All right. Then about 15% went for selling expenses, 14% for admin. I had 0.5% for interest revenue. Interest expense ate up about 3% of it. And then my income before income tax, I had about 9 cents, a little more than 9 cents left over out of every dollar I sold. And then net income, it's not, remember it's accrual basis. So I didn't actually necessarily get the cash, but basically for every dollar that I sold, I ended up getting to keep about 6 cents. And that's about normal. All right. And then they did the same thing for 2017. And you can kind of see, where you spent less money or where you spent more money by comparing these percentages. Okay. All right. And the balance sheet, total assets or total liabilities and equity, because if you remember they're the same number, those are your 100% figures. Look how interesting. When they took a picture, they had maybe that was my cursor. I don't know. I find that interesting. All right. So I only copied over the current assets here. So the total assets is 100%. All right. So this is my 1 or my 100%. Let me make it a percent. I'm going to do at least one decimal. Okay. And since it's the 100% figure, then everything is a percentage of the total here. All right. So my cash is the 29,000 divided by the 787. Once again, I just cut off the zeros, no biggie. All right, accounts receivable is 114 divided by 787. Merchandise inventory is 113 divided by 787. Prepaids are 6 divided by 787. And so on and so forth. So 114 divided by 787. 113 divided by 787. 6 divided by 787. Once again, I can copy if I want to, but I have to do the same thing. If I just do the 262 divided by 787, and I don't make it absolute, this is a relative cell reference. So notice it's divided by 045. And when I copy it down one, that shifts, and I get an error message because there's nothing down here. This one shifted to 046, and there's nothing in 046. So if I want to copy that down, I have to put a $sign in front of the 45 so that it always goes to the 45. That it's absolute. Okay? Now, one thing I do want to point out is these percentages will add up to the total current assets. All right, and then the total current assets plus these two add up to the 100. So you can see here of their total assets, most of it is invested in plant, property, and equipment. So they probably have a store that they sell stuff out of. All right, and then they did the same thing down here for the payables. Okay, these three add up to the 18%, and the 18 and 37 add up to the 54. All right, so don't double count things. But everything is divided by the 787. And then the 23 and the 21 add up to the 45, and then the 54 and the 45 add up to the 100. Okay? And then you can see where they, where their money is. Of their liabilities, 37% of it's long-term. Well, of liabilities and equity. 37% of liabilities and equity is long-term liabilities. And then equity is 45%. All right, one thing that you'll also see with respect to a vertical analysis is a common size income statement. Or a common size balance sheet for that matter too, but a common size income statement. And this, everything is stated in percentages. And it allows you to compare companies of different sizes. Okay, so for instance, if I had a small toy store here in Kingsville and I wanted to compare my financial statements to, I want to say Toys R Us, but Toys R Us doesn't exist anymore, but I'm going to say Toys R Us. I can't because Toys R Us is way too big. You know, it's far bigger than mine. But I can convert it to percentages and kind of see how I'm doing as far as comparison with the other. So with Smart Touch Learning, they're spending 60% of every dollar on the inventory that they're turning around and selling, whereas this learning school is only spending 37%. So this company is making a lot more money because they're spending a lot less on the products that they're turning around and selling. All right. Or they're able to sell them for more. And so, you know, cost of goods sold isn't as much from each dollar that they're selling, because their selling expenses are quite high, but their admin expenses are less. So total operating expenses are similar. All right. They're also making a lot more in interest revenue. So their other revenue is higher. They're, of course, paying more in taxes, but they have a higher net income. So Smart Touch Learning can see by this that they need to figure out why they're paying so much for their cost of goods sold and see if they can make it smaller.